Welcome to the Oh Hell No podcast, where Kay Nicole delivers a daily dose of inspiration by discussing passion, purpose, and struggle with people who are living their best life doing what they love. Here's Nicole.
Hey everyone, welcome to another episode of the Oh Hell No podcast. Today I have Danielle Roberts. She is a Medicare insurance expert and co-founder at Boomer Benefits and a member of the Forbes Finance Council. Thank you for being with us today, Danielle.
I'm so delighted to be here. Thanks for having me.
Yes, welcome to the podcast.
Lucky me.
Yeah. So the first thing I want to ask you is tell me 3 things that you are passionate about.
Entrepreneurship for one. I would say my dogs have to be in there. I'm a crazy dog mom. And I'm also passionate about fitness. I start off most of my mornings working out at a Fit Body boot camp, and it helps me get into the right frame of mind as an entrepreneur and get all of my stress out from the day before. So that would probably be my third one.
Wow, that's pretty awesome. I'm still trying to get to that place where I can wake up and make that, the first thing that I do.
I know it's a really tough transition. I always worked out in the evenings before I started my business, and I worked in for someone else. But then after becoming an entrepreneur, there's always things that come at the end of the day that are unavoidable. An employee's situation will happen, or a computer will crash, or there'll be problems that arise. So I finally made the switch and moved it to the mornings, which was really difficult and requires extra coffee. But it's worked out well for me now, and I'm able to get up and do it pretty regularly.
Yeah, it's really good. Sometimes I'll run to the gym at lunch because the gym is really close. And that really works out well because then it's done and over with. And like you said, you can go through your day and not worry about, I'm going to miss my workout.
Yes,
So.
that's right. And I love the feeling of having it done and knowing that when I go home after work, I don't have to work out. I'm all done for the day.
Yes, that's the best feeling.
Yes, you bet.
So what led you to the insurance industry? Walk me through how you ended up on this path. Did you go to school for anything that had to do with insurance? Or were you working someplace and you was doing a specific job and then this came into play? Give me the backstory.
Okay, yeah, I'd love to share that because I think that insurance is an industry that a lot of people overlook. After all, you don't grow up and say, someday I want to be an exciting insurance agent.
Right.
It's not the same as being an astronaut or a movie star or an attorney, but it's one of those things where everybody needs this product. And so I had worked for a long time in staffing, temporary staffing. Got that job right out of college. I have a journalism and English degree, but I very quickly found out that you would never be able to pay back your student loans on what a journalist can actually earn. So very respectable profession, but doesn't pay a lot of money, especially coming right out of school. So I ended up taking a job in business, and I worked for a temporary staffing company here in the Dallas-Fort Worth area called Cornerstone Staffing for about 10 years after I graduated. Great entrepreneur. I really learned a lot from him. When I left there, I had been in a number of management positions, but I always had that feeling in the back of my mind that I wanted to do my own thing. I was a very entrepreneurial kid. My brother was as well. We were always scheming up ways to make money and building little businesses, and we loved doing that. So later on, of course, when I was in my career for 10 years, and I had kind of reached this point where I was just burnt out on hiring people and sending them out to these jobs. And sometimes they would no-show. And it's a really tough the human commodity is a really tough industry. And I knew I didn't want to do sales in that industry. So I actually had been looking on monster.com and sites like that for a number of years, trying to find the right opportunity and asking myself, what could I do? When a girlfriend told me about a group interview for a health insurance job, and she was also looking for sales at that time. And so I just went along with her, and I remember even thinking, no, this won't be it. It's boring. And I walked out of that meeting, and I was thrilled to death. I thought, this is actually not boring at all, and I could totally do this career. Some of the things that I've shared before with friends and family, and even on some other podcasts, is that when you are working in the insurance industry, although it's not a super exciting industry, you don't have any inventory. You don't have to get a business location. There's not hours that you have to have employees working. This is a job that you can start literally out of your office in your own home. The overhead is very low. It's easy to take an online course to get your insurance license and just take a test. I think I probably spent less than $500 getting it off the ground. And if you don't have a lot of money to invest in your new career as an entrepreneur, bootstrapping is something that you can do in the insurance industry because everybody needs insurance. So whether you're working with life insurance or health insurance, auto, homeowners, all of us own these products. So you have a circle of people right there in your friends and family that you can start selling your products to. And then you can also beat the street in the insurance industry, as we would call it. So that's exactly what I did. I cold called businesses for a number of years in the beginning, just selling group health insurance products. And I got into the Medicare side of things when people were asking me about their parents. Like, this is great about my health insurance, but do you know anything about health insurance for people who are age 65 plus? And I didn't at that time, but I quickly learned those products and got licensed to sell them. And then over the period of the next couple of years, we slowly transitioned our business from doing a bunch of types of insurance to specializing just in the Medicare products. I love working with baby boomers. They're an amazing generation of people. My parents are baby boomers, and I just like their spirit. I like how dedicated and loyal they are. I admire their workmanship and the long years that they put into their own jobs. And I like how in this day and age, they're kind of 65 is the new 45.
Mm-hmm.
People are retiring and they go on to new endeavors. You know, they might travel the world and do hobby type things, but a lot of them start their own businesses or do side hustles after they retire, pursuing something they love. And so it's a great generation of people to work with as well. So I guess you could just say that's kind of a long story, but that's how I stumbled into this profession. And of course, now I'm delighted to be in it.
Yeah. So that kind of answered another one of my questions. I was going to ask you, how did Boomer Benefits come about? And I guess it came about because you enjoyed working with the baby boomers and people of a certain age and selling that type of insurance.
Yeah, that's right. So baby boomers are aging into Medicare for the next 10 years, and they've been aging in for several years. And so every now and then someone will call and ask if I'm talking about baby boomers or Oklahoma sooner boomers. And I have to say, nope, it's the baby boomers. Those are the ones we care about. And so, yeah, they'll continue to age into Medicare here over the next decade. So there might be a point down the road where the name isn't quite as relevant as it is today.
Right.
But we've got a lot of years here now to work with this generation before we reach that point.
Yeah. So Medicare, do you have to be 65 and over to get Medicare?
Yes, most people age in at 65. And one thing to be aware of is that it doesn't matter whether you're already taking Social Security or not. So even if you are delaying your Social Security and you're going to not take that until age 70 to increase your benefit, you can enroll in Medicare at age 65. So you're eligible for that based on taxes that you've paid during your working years, or if you were married to someone who paid taxes for that, that provides one part of Medicare, and then the other part you can buy into at 65. But there are also some people who can qualify earlier if they have a disability. So if you qualify for Social Security disability and you've been on that for 24 months, you would automatically then qualify for Medicare. And so certain types of injuries, illnesses could qualify you for Medicare younger than 65 in some situations.
Interesting. So you said that starting this business, it's low overhead and it's not that, difficult to get the certifications and things like that. But being an entrepreneur, I know that there are struggles. So what would you say was the hardest part of starting the business that you created and is running today?
In the beginning, it's really hard when you're in a very competitive industry like this not to fall victim to the comparison factor. So you can look around you and you can see all these successful insurance agents. And I know this happens in many other industries to entrepreneurs as well. And sometimes it's hard not to get down if you've been out beating the street all day and you really haven't had any success. Or let's say you sold a policy a month or two ago and now that person got a job and they're canceling their health insurance. So, you worked so hard to put this policy on the books and then you lose that. And that struggle sometimes makes you look at the guy owning the State Farm down the road that's been in that same building for 15 years and is obviously very successful, and think, geez, I'm just never going to get there. It's such a long road. And I always tell people you have to be very careful not to compare your beginning to someone else's middle or end. There's definitely room for you in whatever industry that you're in. You can carve out a little piece of that and make it your own. And that was probably one of the biggest struggles in the beginning, was just not getting down at just how long it takes to pile those policies on. And I can see that now, and I'm on Facebook and a number of insurance groups, and I see that same thing happening with other new agents, where they'll vent about that online and say, gosh, I'm just never going to get here, or wow, look at this person with this awesome website and it's going to be so hard for me to ever accomplish that. How long did it take? And also, you're trying to figure out how you are going to go about getting your leads, and any business needs prospects. And sometimes if you don't have the cash money to invest in buying leads, you have to actually go out and do cold calling or some things like that are not always your most pleasant job duty. But there comes a point where everything just clicks and you realize now you've got a little funnel happening and you're getting hits on some of the cold calling or work that you've done to generate leads in the past. And you can just feel the momentum change. And I guess for us, that really probably took place in the middle of 2006, when I'd been at this for a good solid 18 months. That was when I sort of realized that, okay, sometimes I'm getting a phone call and it's a referral. It's not somebody that I went out and knocked on their door. Or I would have a little extra money at the end of the month and I could spend that on buying internet leads and work those instead of having to go out and cold call front door of businesses and try to get business that way. So you do have to remember that every other entrepreneur started just like you did. They either had a cash infusion, which allowed them to buy leads, but then at some point they're going to have to pay that money back to the investors, or they bootstrapped it and they've been in your shoes, and everyone goes through that. So make sure, if you're a new entrepreneur, not to get too down on yourself in that first early year or two, because it's a long haul in certain industries. But as you can see from the type of business that I have today, all of those early years were very well spent. And actually, now that the business is up and running and so successful, sometimes I look back at those days very fondly, and I remember what it felt like to have all those hopes and dreams and to not have achieved them yet and to be going for them. And there's a good side of that as well.
Yeah, I agree. That's great advice. And I love what you said about not comparing your beginning to someone else's middle or end. That's an amazing statement. So now that you are up and running and you've been in business for a while, what do you say are your struggles today?
Sure, they totally change, because in the beginning it was just myself and then myself and my brother, and we pounded the phones for a few years, just the two of us, and the workload was an issue, and trying to get everything done with just two people. And now we have a whole different set of problems. We're almost to 50 employees. We have those type of things to worry about. So there's human resources issues, and you've got to learn a whole new aspect of the business. And there's hiring that has to be done, and you've got seats to fill. And so those things can also be a struggle. We are currently moving into a bigger office space, and that has been a massive undertaking that can really create a lot of headaches, because you've got to think of a million things, from the easy stuff like which kind of tile are we putting on the floor, to how many hundreds of feet of cable you need to run your IT stuff from one piece of the office to another, and how we're going to HIPAA protect certain parts of the building. And so the types of you still have problems, but the problems themselves actually change. And so I would say that, the average running of the business and with managing a group of employees is probably the biggest struggle, because things just happen. People have sick days, or occasionally you have a problem employee, or you've got a position that's really hard to fill. And those things are kind of the daily struggles that we deal with more now than what we had in the beginning.
Okay. So what do you enjoy the most about your day?
I love coming in the morning and diving into where do we stand as of this moment? So for me, in my part of the business, I handle all of our marketing and I communicate with my team on Microsoft Teams, which is a program sort of like Slack where you can all chat and we post our wins for the day and everything. And almost every day there's something, you're logging in and you're looking to see, okay, how many followers do we have on social media? How many hits did we have on the website last night? How many new leads come in? And I love just sort of that state of the union, those first 20 minutes where you're looking to see where everything rests today. If you're having a good day, you come in and you've been quoted in CNBC, and that's a really exciting day. And then there might be other days where, the good news is that you had a good lead flow last night and your agents have too many leads this morning, so we have to cut back on the advertising a little bit. That every morning looking to see where we are is a super exciting time of day for me. And I love, planning out the day with the team. We have a couple of quick conversations. We all declare kind of what we're working on, and then we scatter and conquer, divide and conquer. And I love that feeling of teamwork. And I love that early morning, walking in the office at 9 a.m. and having those few minutes with the team to sort of plan out what's next.
Okay. Do you have anything that is your least favorite thing to do in your part of the business?
Definitely keying payroll is the bane of my existence. And I have to do it, of course. And one good thing is when we're paying the commission checks to our agents at the end of the month, I do like keying that part because it's always exciting to see them succeed, especially if you have a new person that's, just hitting their stride and now they have their first big month where their commission check is a little bigger than it has been in the past. That's kind of exciting. And I love watching all of them succeed and be happy for them. But on the average, every other week, keying that payroll in, it used to be something that took 10 minutes when we were small, and now it's something that takes a couple of hours, and I dread it.
Yeah.
So
Sure.
bookkeeper might be in my near future.
So tell us, what is Medicare supplement?
Sure. So Medicare, a lot of people think of this as a national health insurance program, which it is. It's a national health insurance program for people age 65 and older. But they assume that because they paid taxes toward it during their working life, that Medicare will be free and it will cover 100% of everything when they get ready to retire. And that's just not the case. So Medicare not only has premiums that you pay for your outpatient coverage and your drug coverage, but Medicare also only covers about 80% of your medical needs. So anything that's done on an outpatient basis, everything from doctor visits and lab work all the way to outpatient surgeries and chemotherapy, Medicare pays 80%. So you need some sort of supplemental coverage to pay that other 20% and to help people pay deductibles and coinsurance. And you and I, when we think about our current coverage, we pay for our coverage. Sometimes we have it through an employer and it's via a payroll deduction and we're just paying a portion of it. Other times you're paying all of it, or maybe you have a subsidy through an individual policy that you got on the exchange. There's a premium that you pay for any type of insurance, and that goes to pay for the insurance itself. But then there are costs that you spend as you go, things like co-pays, deductibles, and coinsurance. And for whatever reason, the public just seems to think that when we turn 65 and we get on Medicare, those things go away, and they don't. So, of course, we need to have supplemental insurance because when someone's living on a fixed income, if they go and spend a night in the hospital and they owe over $1,300 for that one night, because that's their deductible, that's a lot for someone that has retired and now doesn't have new income coming in.
Mm-hmm.
So they want to buy coverage that is going to take care of that for them so that if they do have a night in the hospital or they do have a surgery, they're not sitting there frightened to open their mailbox and see what kind of bills have come in. And so that's the supplemental insurance that we sell. And then there are also drug plans that you can enroll in that go alongside of your Medicare and your Medicare supplement, and we work with those as well.
Are the supplemental plans expensive? Because one thing that a lot of people complain about is how expensive insurance is overall.
Yeah, I would agree that insurance is very expensive in America, and we have sometimes little control over it. So, for example, here in Texas, a female turning 65 who is a non-smoker can probably get a pretty full coverage supplement for right around $100 a month. And that is, to you and I, it sounds really affordable, but you have to remember they're already also paying for Medicare Part B, which costs them around $135 a month, plus an extra $30 or so for a drug plan. So when you add that all up, they might be spending close to $300 for their health coverage as a whole. And again, when you don't have regular income coming in, that can seem like a lot. So that is a concern. But if you were to live in a state like Florida, you might pay more than 2 times that amount because the cost of healthcare down there is just more expensive. So a supplement, it isn't necessarily something that's cheap, being that it only covers the supplemental piece. You kind of have to look at that whole picture and put together your supplement, your drug plan, your Medicare itself, and then see, hey, what can I afford based on the income that I do have?
Wow. See, so I have a lot of things that I really don't know about Medicare. And my next question is going to be, what do you think people are the most ignorant about when it comes to, healthcare, Medicare, things like that?
Mm-hmm.
One thing I could tell you is I always thought Medicare was free.
Yeah, and you are not alone. So I feel like I shout it from the mountaintops. I have a column at Forbes where I write for the Finance Council, and I'm always mentioning it there. On my own website, most of the blog posts make some reference to the fact that it's not covered. On our social media, I have videos about this because that is such a widespread belief. So I feel like I'm a little crusader out there trying to let people know that someday this will cost you money, and it's a cost that you have to prepare for. So when we think about retiring, of course we think about we're going to have a mortgage. Well, our mortgage be paid off by then, and we're going to have some travel, and we're going to visit family, and we'll have utilities, but maybe they won't be quite as high as they used to be. Perhaps we downsize our living and we have a less expensive house because the kids have flown the coop. And so we think about all of those things, but we don't always think about healthcare. And that's because throughout our working lives, we have employers that pay that healthcare for us, or we may only pay a little portion of it. Well, now we go on to Medicare, and some of what we paid in taxes covers one piece, but there's all these other pieces we have to pay, and people are just totally unprepared for it. So that is certainly one of the things that is most important. And then the second thing that I would tell people that I think that they often don't know is that there are enrollment periods for Medicare, and if you miss them, they can result in significant penalties. So you have a 7-month window to enroll in Medicare that spans right around your 65th birthday. And if you don't have other coverage, like you're still working for a large group employer, if Medicare is going to be your only coverage, then you need to not miss that 7-month window. It's really important that you sign up then, because if you don't, later on when you do, you'll have a penalty that grows with time. Not too long ago, we actually had a caller to our office that was 72, and he had never signed up for Medicare. And he always thought that this employer coverage that he had was creditable coverage, which allowed him to delay that. But he worked for a small employer with less than 20 employees. And in that circumstance, Medicare is primary. So this poor gentleman turning 72 and now finding out he's going to pay a 70% higher premium for the rest of his life because he didn't know. So I love going on podcasts like this one, and also writing for any outlets that I can to try to let people know about some of these things, because if there was a class that everyone could attend at age 50 and we could explain all of this, then people would have a little bit of time to prepare, thinking, hey, I've got to put aside a little extra money because, Medicare isn't free, and I know I need to plan for that now. And maybe I'm going to work for a couple of extra years. And those are things you need to think about. Not everyone retires at 65 anymore. So if you don't have a lot going in, or you feel like you don't have enough, maybe you decide to work a few extra years, or do like we kind of talk about, an encore career where you leave your full-time day job, but you go into something part-time or something that you love. Maybe it pays less, but it also is going to have the health benefits or provide you money to purchase the health benefits. Those are all things that people need to know ahead of time so that they can pay, as little as possible and hopefully have no penalties at all when they get to Medicare.
So let's say you're 65, you turn 65 and you're still working at a company, and you do still pay, you have their insurance and you're paying that premium. Should you still be signing up for Medicare and getting the double coverage just to be on it so that when you retire, your rate won't be high, you won't get penalized?
Great question. So the answer is it depends on the number of employees. So if you're working and that employer has more than 20 employees, then you could enroll in Medicare Part A, which is your hospital coverage. That costs you nothing. Your taxes have already paid for that. Most people, 99% of all enrollees, pay nothing for Part A at 65. So most people will have their group coverage, that large group coverage will be primary, and they'll enroll in Part A, which is secondary. And then if you happen to have a hospital stay, you might only owe a portion of that because Medicare's deductible could be lower than your plan deductible, and Medicare will pick up the difference. So it may or may not help you depending on where that deductible is, but it certainly can't hurt you in most circumstances because you paying nothing for it. So in that circumstance, you could delay parts B and D because those have premiums associated with them, and your group coverage already includes outpatient and drug coverage. So a lot of people will delay those two parts. On the flip side of that, if you work for a small employer, then Medicare Parts A and B are primary and your group coverage is secondary. And that's where it becomes really important for you to enroll in both Parts A and B at 65. And you should really work with an agent or a broker to compare that employer coverage and what it costs you against what a Medicare supplement or Advantage plan would cost you. Because sometimes small employers may not have as much money to contribute toward your health insurance. So I have sometimes met people who were turning 65 and they're on a small employer plan where the employer only pays 50% of the cost of the coverage, and they're paying for $500 a month out of their own pocket. Well, you could leave that plan and get on Medicare and a supplement a lot of times for less than that. So if you work for a small employer, you do want to enroll in both Parts A and B, but then you want to compare that employer coverage against private coverage to see which route is going to be most cost effective for you.
Wow, that's great information.
Yeah.
So I've heard people complaining about Obamacare, and some people love it, some people are complaining, some people I really don't know what the hell was going on with that because I have insurance through my job always, and I'm just at that place in my life where I'm still working, thank God. I'm pretty healthy, and I'm given this insurance through my company, so I always sign up with that. Did Obamacare affect your business? And if it did, how? And if it didn't, can you explain why it didn't?
So it did impact our business. Prior to the passage of that law, we used to write individual health insurance plans for people under age 65, as well as the Medicare plans. So we did both because a lot of times you'll have one spouse that's turning 65, but the other spouse is younger. Well, when the first spouse joins Medicare and leaves their group health plan, this leaves the second spouse, the younger one, without coverage. So we would write those individual health plans and we would help them enroll in those plans. When Obamacare passed, we sort of saw the writing on the wall. I knew that because it was going to be the government aspect, I expected that they would cut the commissions on those plans, and they did for certain. So what we used to be paid to manage someone's health plan, now an agent selling those plans makes less than what you did before the passage of Obamacare. So we had to evaluate, based on how much time it takes to help someone with that kind of coverage, is it worth what we're going to be earning on the back end? And we felt like we were already drifting in the direction of Medicare. I would say Medicare at that point was probably about 70% of our business, and maybe 30% was individual and group health. And so when that changed, though, we decided, okay, we're gonna keep our current clients and we'll help them for as long as they're with us with enrolling in plans, but we're going to stop marketing and getting new clients for that. And so I would say probably over the course of those couple years, as people fell off those plans and enrolled in new Obamacare plans or new group health plans, we slowly lost that business. So we probably lost about $100,000 a year in annual revenue. Might have been a little more than that because of the passage of that bill. And that was okay because it put us, firmly into the Medicare niche where we're able to concentrate all of our marketing on that. We do still help people with direction. So when someone calls and they're in the situation that I just discussed a minute ago, we will tell them, hey, here's where you go. You go to healthcare.gov, put in your income information. It will let you know whether or not you qualify for a subsidy, which for some people is so helpful. It helps them afford the coverage if their income isn't high enough for them to pay for it themselves. And then they can see a list of plans in their area and choose the plan that's going to be most cost effective for them. I wouldn't say that I think the law was bad just because this happened to our business. I think, there were some necessary things there that happened. Now people can get coverage and they don't have to worry about pre-existing conditions. So that was certainly a really good result of the bill. And it also helped some people get coverage that may not have been able to afford coverage before or had a pre-existing condition which made them ineligible to buy an individual health insurance plan. So we insured that group of people, which was good. On the flip side of that, we have some people ages like 50 to 65. The insurance under the healthcare exchange is very expensive. So although we got one group of people better insured, there was this other group of people who incurred substantial rate increases. And so for older people, especially those people ages 50 to 65, a lot of times, they've worked up in their career over a number of years. And so now their incomes are too high for them to qualify for any type of subsidy. Mm-hmm. And they may be paying hundreds of dollars more for a higher deductible plan than they were prior to the passage of that law. So there were good and bad things really that came out of it. And there are still agents, though, out there that will help you with enrolling in those plans. And I know that we walk our people through, but sometimes if they want a little more help, we'll refer them to an agent that still writes those so that they can have assistance with choosing plans that way. And then we just, of course, have concentrated on the Medicare piece.
Okay, thank you.
Sure.
So what advice would you give to people about healthcare? Like, what would you say is the most important thing that we need to pay attention to and be aware of?
No matter what age you are, healthcare has inflation. So you need to know that over time, what you can expect is that your premiums will get higher and your deductibles will likely get higher, because when we see the premiums go up, we want a way to manage that cost, and you can keep your premiums lower by signing up for a higher deductible plan. And so what I've seen repeatedly over the years is people in their 50s and 60s will come to us getting ready to go on Medicare, and they might be on deductibles that are $6,500, which is astonishingly high deductible. A lot of people can't afford a deductible like that, but it's the deductible that gives them the lowest possible premiums. So when you're planning your personal finances and you're working toward your future, you want to just be aware that especially if you don't have employer coverage, but even on a lot of employer coverages, we've seen this happen where over time, those premiums get more expensive. And it's something you need to plan for because healthcare is so important. It's really important that you're doing your preventative maintenance, but that you've also got something to help you if you have a catastrophic illness or injury. And so if you are continually raising that deductible to keep your premiums lower, you may have a year where an accident happens. You playing sports with your kids and you fall and sprain your ankle and you go to the emergency room and now you owe $2,000. So I like to tell people, if you're going over time with a higher and higher deductible, make sure that you're setting yourself up a rainy day fund. And I tell my Medicare clients this as well. Plan for an emergency. You want to have an emergency fund for anything in life, but it's sometimes good to have a separate emergency fund or a pool of money that you've designated just for healthcare, because as that deductible goes up and as your premiums rise, you may need to dip into some of that money at some point. So if you are under 65 and you're working for an employer or you have the Affordable Care Act plan, a lot of plans now with the higher deductibles allow you to open a health savings account. This is an account during which that you can use for contributing money to save up for medical expenses in the future. When you contribute money to an HSA, that's a top of the line write-off on your taxes, so you never pay tax on that money. It grows and earns interest and compounds over time tax-free. And when you take the money out for a qualified medical reason, including things like dental and vision and hearing, this is something where that money is not going to have any taxes coming out either. So it's kind of like a triple tax advantage. So if you are someone who is savvy with things like that and you would be interested in starting an account like that, look for a plan with a high deductible that is HSA compatible, and then contribute money into that HSA account every year. I think the maximum that you can contribute right now is $3,500 for an individual or $7,000 for a married couple. I max my account out every year. We put in the maximum. And this is something where now eventually when something happens, I've got money in there. So for example, last year I had a surgery that I wasn't expecting. Everything was fine, but a surgery, yep, I'm going to pay $6,500 for sure on a plan that has a $6,500 deductible, and that's exactly what I spent. So I had been building up that money all those years, and that money was in there when I needed it. And I really like for people to do this when they're planning for Medicare as well, because when you turn 65, you can no longer contribute into the HSA account, but the money is yours forever, and you can use it to pay Medicare premiums, copays, deductibles. You can use it to pay for prescriptions. Medicare doesn't cover dental, vision, and hearing, so you can use it for those expenses. It's really a great way to have that rainy day fund, and it will help you think of it separately from your other emergency fund, because you can't touch that money for anything except for medical without incurring a penalty. And so it's a great way to save for those future health expenses.
That is amazing. I never knew that. And that's different from the flex spending account, right?
It is, that's right. So with
Okay.
a flex spending account, that money is not yours to keep forever. You spend it in that year. But the HSA money that you contribute does not belong to your employer. It's always yours. And as long as you don't take it out for something other than medical, you won't ever pay any income tax on it, and you won't pay any penalties either.
And where do you start an HSA account? Like, do you go through your insurance company?
So the first step is to sign up for an HSA compatible plan. And when you're looking, if you go and enroll in a plan through the healthcare exchange, you'll usually see the letters HDHP, which stands for High Deductible Health Plan. So in order for a plan to qualify as a high deductible health plan, it has to have a deductible higher than, I'm not sure the current limit. I think it has to be higher than 1350, but it's somewhere around there. And then of course, all the way up to the 6,500 range, which is kind of the highest deductible that an individual would have now. And these plans do not have cushy things like copays at the doctor or copays for prescriptions. So on my current insurance, where I have a high deductible health plan, if I go to the doctor, I'm going to have a network discount because I'm seeing a doctor in my Blue Cross network, but I'm not going to pay a $40 copay. So typically when I go in, it might cost me $80 or $90. I'm going to be paying, it's more like a catastrophic plan where you pay up until the deductible and then the plan kicks in. That's the reason, though, that those high deductible health plans have cheaper premiums than other coverage, because you don't have all those little bells and whistles. So you can enroll in that kind of plan in most urban areas through the healthcare exchange. There'll be multiple options for HSA compatible high deductible health plans, and a lot of employers offer them now too. So if you're working for an employer, you could check with your benefits person and just ask, do we have any plans that are compatible and would allow me to open an HSA? So that's the first step, is getting the coverage that qualifies you to get the HSA. And then if you work for an employer, sometimes they will have an account that you sign up for right through them that's managed through your cafeteria plan at work, and they will give you the paperwork and you sign up with whichever bank they work with. Some employers will even contribute money into your HSA for you, which is great. But if you don't have that, you could just go down to your local bank. I bank at Chase, and I could walk in and just say, hey, can I sign up for an HSA plan? And they can help you with opening an HSA account.
Wow, that is, girl, you're giving such great information tonight.
I love it. I love the HSA. So
Yeah.
really great way for people to save.
Yes, that is amazing, because I always get the flex spending and they really piss me off because that is my money. And
Yeah.
I don't understand why I can't use it for whatever medical bill that I have whenever I had that medical bill. Like this whole, oh, it has to be within this year. And if you move from one job to another job, you have this amount of time to use this money, or you lose this money. Where does this money go? Who's taking our money?
I totally agree with you, because you're supposed to, at the beginning of the year, guess what money you're going to spend that year on healthcare, or I know some flex spendings have like things like childcare. So it puts the employee in this position of having to make this guesstimate on how much they think they'll spend, or they lose that money. So I hate that aspect of the FSAs as well.
Yeah, it sucks.
Should be yours.
Yeah, exactly. So, what should people know going into the 2020 Medicare annual election period?
Okay, so the big thing to know heading into the election period is that your current drug coverage, Part D drug plan, if you have one, or if you're enrolled in a Medicare Advantage plan, which is a private health plan that some people enroll in place of Medicare, those two plans benefits are only good for one calendar year at a time. So whatever benefits you have today, those are changing for 2020. So you want to be watching your mailbox in September and early October. You will get a notice of, it's called an annual notice of change. It will come in the mail. And in that notice, it will line up side by side everything that's changing for next year. So if the premium is going up or down, if your doctor copay is going up or down, if one of your prescriptions is being dropped from the formulary, those are things that are very important for you to know when you get the letter, so that you can use the Medicare annual election period to switch to another plan. That election period starts October 15th and it runs through December 7th. And during that window of time, you can disenroll from your current plan and enroll in a different one. So for example, let's say that you had insulin-dependent diabetes and you have a Lantus Flex Pen, which is a very expensive type of insulin or diabetes sugar management, something like that. I know that it's expensive because I have many clients with diabetes that take that medication. Well, that drug might have a retail cost of $400 or $600, and you are getting it through your drug plan and you're paying a $50 copay. If they drop that medication for next year and you don't know that, then come January, you're standing at the pharmacy trying to fill the medication, you're being told it's not covered. Well, now you've got to go file with your doctor and try to get an exception and see if the drug company will approve it. And even if they do approve it, it'll probably be much more expensive than it would have been if you were just on a plan that offered coverage for that. And it's surprising how many people out there don't shop their drug plan every year. They think, I like my plan, and they ignore their annual notice of change. And then come January, something happens and they realize it when it's too late. So always review that packet that comes in the mail. And if you have trouble understanding insurance language, that's exactly what your agent or broker is for. Give them a call, whoever helped you sign up. And if you didn't use an agent, you can call the customer service number at your current carrier and say, hey, I got my annual notice of change. Can you walk me through this? And take a look at that so that you can be prepared to make a change if you need to. We see people all the time that will call us, our current clients, and we'll find something that's changing. And if they hadn't have changed, it might have cost them an extra $1,000 a year next year for their drugs. So if I were to give any one bit of advice, that's the thing, is that you've got to know that the coverage you have may be changing and you need to review it. Now, on the flip side of that, your Medicare supplement, if you have a supplement, the part that covers that 20% that Medicare doesn't cover and covers your deductibles on medical and outpatient and inpatient, that is not changing. So you don't have to worry about your Medigap or Medicare supplement plan. The part that's changing is only the drug coverage, or if you have a Medicare Advantage plan, those also change.
Great. So do you feel like you're doing your purpose work? And if you do feel like you're doing your purpose work, what exactly about your work do you feel is like purpose driven?
Definitely. I can remember being in 8th or 9th grade and we were doing some sort of career thing and we were talking about what we'd like to do someday. And my answer was, I would love to work with elderly people. I always had a heart for them. I had wonderful grandparents and a ton of aunts and uncles, and I just loved those people. And I feel like now, even though seniors today are very different from the seniors of my grandparents' generation, I love helping people to understand something that's confusing, something that's overwhelming. All your life you're on group health insurance that your employer picks for you. And then suddenly at 65, they toss you to this beast of a Medicare program with 4 parts and 10 supplement options and hundreds of drug plan options and other things like that. And you're supposed to be able to figure this stuff out. And so people always come to us confused. And I love the education process. I like taking a confusing language and turning it into something that people can understand. And that light bulb moment happens. And they're so grateful and happy that they finally understand their coverage. It's like giving them their power back. And that's the part of it that I love. That's the piece that makes me feel purposeful. I love doing all of the education piece and putting that information out there, and knowing when I go to bed every night that somebody dealt with their Medicare better today because I was out there putting that information out there. Or we've got a service team at my agency that helps people on the back end. So, if they get a bill they don't understand, or if they're standing at the pharmacy counter and they're being told their medication needs a prior authorization, they have no idea where to go with that stuff. And I love telling them, hey, you can just call our office. We've got a team that handles that. And so just knowing that I've put that resource in their hands and that they can call us for anything they need, it makes me feel good. It's one of those careers where you get the warm fuzzy at the end of the day. You help someone, and that's a good feeling. And I think that's why I feel so purposeful about it. And I can't imagine doing anything else. I get up every day and go to work loving my job.
That's incredible. I love it. And you are really good at it, because I could listen to you for days. Like, how some
Well,
people,
thank you.
some people talk and you're like, oh God, I can't wait for this to be,
I'm
but
sure.
yeah, you have a great voice. You're knowledgeable. The way you break things down and explain it, this is like your thing.
Thank you. Yeah, it's a good feeling. It really is. But I so appreciate that very much. Thank you.
No problem. So this is the Oh Hell No podcast, and I always ask my guests to share an Oh Hell No moment that they've had along their journey. And I know that we have a lot of Oh Hell No moments. So an Oh Hell No moment is a moment of shock or disbelief, or, something that happens and you just like stop dead in your tracks like, oh hell no, that did not just happen. It could be a good thing. It could be a bad thing. But it's just a part of our journey. We either learn from those moments. Hopefully we're learning from them. So I ask people to share an Oh Hell No moment that has taught them something or changed their perspective on something.
Okay, I've got a good one for this, especially if someone's listening and thinking about being an entrepreneur. When I first started the business, before I had confidence in myself to be able to do this on my own, I met 2 other insurance agents and I quickly partnered with them, thinking, hey, 3 heads are better than 1. And these were people that I did not know very well. Well, just because you have an interest in the same industry does not make you a good partner for someone. And so I found out over the course of that next year that we had very different work ethics. All 3 of us had different work ethics. And we also had different ideas about the incoming money. So I was in a position, I had negotiated with my former employer to let me have a much lower salary, but I took this one piece with me and I handled it on a contract basis. And so I had this little bit of money coming in that I could live on. And I wanted to invest all of that income back into the business every month. And my 2 partners were not in that position. So I just felt like every day I was out there beating the street and we were getting these policies and they're finally coming in and they're paying commissions into the agency. And at the end of the month, nobody except for me wants to leave that money in so that next month we might be able to buy some leads instead of beating the street so much. Well, I was realizing that I was the one going out and doing all of this work all the time. And the other partners just weren't putting in that same effort. And I definitely had an oh hell no moment about that. Like, hell no, I am not going to sit here busting my tail every day. And then at the end of the month, I'm giving away 2/3 of the commission. We need that money to stay in. And I was leaving my portion in to try to fund growth of the business. Now, this doesn't mean that they were bad people. In fact, they both were just fine people. They just had different ideas and different circumstances. So if I could save anyone listening, believe in yourself. You can do this. You don't necessarily have to partner up with someone. And if you do, please make sure that you have those 2 conversations. Say to the person, what kind of work ethic do you have? Are you going to be putting in 20 hours a week, 40 hours a week, 60-hour weeks? What is your philosophy on this? Think about their family life. What kind of obligations do they have? And then also on the flip side of that, hey, when we have $500 come in at the end of the month, do you need some of that right away? How should we take that money? Have that conversation about what we're going to do with the incoming profits that come into the business so that you both have a clear expectation on how you're going to use that money and nobody is feeling burned. In my case, it was a long and very hard lesson because I had to buy out one and then buy out the other and then stabilize, work by myself for a little bit. And then it occurred to me, who has the same work ethic as me is my brother. And so I sold him on coming into the business with me, and it worked beautifully because we have the same parents and the same work ethic. But boy, that was a tough mistake and a hard one to swallow. So that would be my oh hell no moment. And I hope that anyone that has listened to that, if I can save even one person out there from going through that nightmare, I will consider that a victory.
Yeah, that is a serious oh hell no moment. All right. So it was such a pleasure having you on the podcast. I learned so much today, and I think that people are going to really enjoy this podcast because it's just really dropping a lot of gems and giving us information, and information is power, and we can make more informed decisions as we get to, the age where we need Medicare, or even for our parents who are, coming up on those ages if they're not already there. How can we learn more about Boomer benefits?
Of course. So we are really easy to find. Our website is boomerbenefits.com. It's a great one to look at if you want to get a handle on Medicare, lots of good education and things on there. And also on almost any social media, we are Boomer Benefits. We have a Facebook channel, a YouTube channel. We're even on Instagram and Pinterest, even though not that many boomers are really big demographic in those. We figure eventually they will be. So wherever you like to get your social media, you can find us at Boomer Benefits. And feel free, if you're an entrepreneur, you can always message me if you've got a question. I'm more than happy to answer it for you.
Amazing. Thank you so much.
My pleasure. Thanks for having me.
Yeah.
Thank you for listening. Be sure to subscribe and rate the show.